Hey everyone, I have a big announcement. And if you want to hear that, stick around to the end of the video. So right now, Bitcoin is rising and falling. And it's predicted that in the middle of next year, it'll peak. But in the meanwhile, traders are using signals right now to get as much earnings as they can until that peak happens. Because we really don't know how long Bitcoin's going to stay in this phase until it breaks out. And I'm going to be sharing some of those signals with you, combined with the top 2 highest win rate strategies in trading Bitcoin. Now, to understand the importance of what I'm about to share, you need to understand that when Bitcoin peaks, there's a high probability that it's going to plummet very quickly, and it'll drag a lot of people down with it. And you do not want to be on that ship when it sinks. So these 2 strategies that I'm going to share with you will not only maximize your earnings, but it'll also help you to jump off in time. So if you want to avoid drowning in losses, stick around. So without further ado, let's get started. You can get to this website pretty easily. It's called candlecharts.com, and you can pull up Bitcoin, just type in BTC USD, and there it'll pop up for you. To begin, let's dive into what we call the Moving Average Convergence Divergence, or MACD for short. You can also call it the MACD. The MACD is one of the most popular technical indicators in trading that helps spot trends and potential changes in direction. It's shown as lines or bars at the bottom of the price chart. These lines indicate whether the market is going up or down and can signal when to buy or to sell. The MACD indicator by itself is alright, but you want to combine it with a couple other indicators so that it'll perform so much better. Now, the MACD consists of 2 lines that move together or cross each other. Now, the main line, which is in blue, is the MACD line, and it's calculated by comparing short-term and long-term moving averages. This is done by subtracting the 26-period exponential moving average, EMA, from the 12-period EMA. When the MACD line is above 0, which is right here, it suggests an upward trend, and below 0 it indicates a downward trend. Now the signal line, which is shown in yellow here, is the EMA, or the exponential moving average of the MACD line over a certain period of time, usually over 9 days. Crossover between the MACD and signal lines are used as signals to trade. So when the MACD crosses above the signal line, it's seen as a buy signal. And when it crosses below the signal line, it's a signal to sell. But there's more to it than that, and I'll get to that shortly. In histogram form, the bars represent the distance between the MACD and the signal line. Bars that are above the baseline mean that the MACD is above the signal line, which you can see these bars are green, and that signals an upward trend, while bars below the baseline shows downward trends in the market, and those you can see in red. So if the bars in the histogram are getting bigger, that means that there's an increase in momentum, and if those bars are getting smaller, then that means that there's a decrease in momentum. Now the next thing I'll discuss is what we call a stop loss order. And let me zoom in on this graph so that you can see what I'm talking about. A stop loss order is an order that you place with your broker to either buy or sell a specific stock once the stock reaches a certain price. So, for example, if you issue a sell stop order at a specific price below the last trade price, when the price falls below the specific price you've selected, then it triggers a market sell order. But keep in mind that a stop order doesn't protect you from the gap in prices during market hours or from one regular market session to the next. So for example, if you hold shares in Bitcoin at 60,000 and you place a sell stop loss order at 58,000 to limit your downside risk to $2,000 per share, and the stock opens the next day at 50,000 per Bitcoin, then you just sold your Bitcoins at 50,000 instead of 58,000 because the 50,000 was below the limit that you set of 58,000. And that can be a big loss for you, especially if the Bitcoin bounces back up higher during that day because you just barely sold all of your Bitcoins for a lot smaller price than what you were willing to. So keep that risk in mind. However, there's another feature called the stop limit order. And what this is that when you place your sell stop order at 58,000, you can place a limit price at 56,000 or whatever you choose, so that if the price drops lower than 56,000 the next day, your market sell will not be triggered because it's below the limit price that you're willing to pay. This can be good if the price comes back up, but if the price continues to drop then you risk it never coming back up for a while and you've lost the opportunity to get out of the market. Now, when I reference stop orders in the rest of the video, you'll know what I'm talking about. Now, let's get to the two strategies that I'll discuss that are, in my opinion, the best for Bitcoin. The first one is often referred to as the double MACD. Now, there's two MACDs that we're going to look at in this strategy. First, we'll look at the weekly MACD, and then based on that, we'll visit the daily MACD. So on this chart, I'm going to zoom out here, and I'm going to go to this indicator here, and we're going to look on a weekly basis, okay? So you can see the MACD at the bottom of the chart, and this is on a weekly basis. Now, on this weekly MACD chart, we're going to look at the trend to see if it's above the signal line. So if the weekly MACD line is above the signal line, as you can see here, then we have a confirmed trading window, meaning that we can buy and sell within this trading window as long as that MACD is above that signal line. So if we're in that trading window, then we look to our daily MACD to make trading decisions. So I'm going to go on my chart here and go to daily. Now, in the daily MACD, when the blue MACD crosses above the yellow signal line, it's an indicator to buy. And when the MACD crosses below the signal line, it's a signal to place a sell stop loss order underneath the wick of that closing daily candle to limit our downside risk. And if you'd like, you can place a stop limit order to prevent selling at a smaller price than what you're willing to. But remember the risk of it coming down and not coming up for a few years, and you'd be stuck in that market until then. Now, going back to the daily MACD signals of buying and placing sell stop orders, you can do this as long as the weekly blue MACD is above the yellow signal line. To make it simpler, you can look at the histogram and see when the positive bars flip negative to determine when the MACD goes below the yellow signal line. So as long as these bars are green, you are in the trading window. So this is a fantastic strategy to prevent downside while really monopolizing on upside. Now, the second strategy is really fantastic for Bitcoin, and it still uses the MACD, but instead of focusing on the weekly and daily MACD trends, it instead focuses on whether the MACD is above or below the baseline to either short sell or buy in. So when using this strategy, we're going to go to the daily trends, and we're going to zoom out a little bit. So when using this strategy, when the bars flip to positive, when the MACD is below the baseline, this is an indicator to enter the trade. However, if the bars flip positive while the MACD is above the baseline, you don't want to enter the trade. It's the same concept with short selling. You only want to enter a short trade if the lines are crossing downward and it's above the zero line. And I'm going to zoom out a little bit more for you. But you only want to do these two things if the market is in trend, and this can only be determined by monitoring the 200-day moving average. So I'm going to add that to this chart. I'm going to type in moving average, and I'm going to click on the exponential. And then under the exponential, I'm going to go to my settings, and for the length, I'm going to click on 200. And for the smoothing, I'll go with 9. Press OK, and I'll zoom out a little. So if the price of Bitcoin, which you can see by the candlesticks, is greater than the moving average, which is the blue line, then the market is in an upward trend. And if the price is below the moving average, again the price being the candlesticks and the moving average being the blue line, then the market is in a downward trend. So using this knowledge to determine trends and combining that with this sell-buy strategy, if the current price of Bitcoin is above the 200-day moving average and the MACD is crossing above the signal line while below the baseline, then it's an indicator that you can buy or enter into a long trade. This guarantees that you are only trading when the market is in an uptrend, which is a very powerful combo. If you want to be safer, you can set up a stop loss below the 200-day moving average so that the 200-day almost acts like a wall that the price has to break through to hit the stop loss. Now, if you want to short sell, you would do the exact opposite, making sure that the price is below the 200-day moving average and the MACD lines are crossing downward above the zero line. Remember that this strategy works best in a strong upward and downward trend. anytime that the trend is moving sideways instead of up and down, it can minimize your profits. So I hope that helps you in your Bitcoin journey to get rich. Now for the big announcement. My wife is having twins next week or the week after. So I might be out for a couple weeks, just letting you know we're gonna have a little boy and a little girl. So I am super excited. So if you don't see me, that's why. And if this is not enough for you, well then I have another video right here that talks about the halving events and predicting what Bitcoin will do in the next year or two. So if you want to look at that, click on this video here. So thank you guys so much for watching, and I will see you guys in the next video.